Ladies and gentlemen, good day and welcome to the Q3 FY22 earnings conference call of Muthoot Finance Limited, hosted by ICICI Securities Limited. As a reminder, all participant lines will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Anshuman Dev from ICICI Securities. Thank you, and over to you, sir.
Good afternoon, ladies and gentlemen. It's an honor and privilege to host the Q3 FY22 results conference call of Muthoot Finance Limited. From the company, we have Mr. George Alexander Muthoot, Managing Director, Mr. Alexander M. George, Whole-Time Director, Mr. George M. Alexander, Whole-Time Director, Mr. George M. George, Whole-Time Director, Mr. George M. Jacob, Whole-Time Director, Mr. Yepen Alexander, Executive Director, and Mr. Uman K. Mamen, Chief Financial Officer. I will now request the management for some brief opening remarks, post which we will open the floor for Q&A. Over to you, sir.
Thank you, and good afternoon to all. I will straight away get into the business aspects of it. The consolidated assets under management increased to 60,896 crores, showing a 9.9 year-on-year growth for the 9 months, and the profit after tax increased to 3,025 crores, up by 8%. Standalone assets under management increased to 54,688 as against which shows a growth of 9%, and the standalone profit after tax increased to 2,994. We had a tough quarter in the sense that the corona impact on the third wave impacted us in this quarter. Therefore, although the advances were up, but the releases or the closures and the auctions were also there. So we had a flat growth in the gold loan business, almost a flat growth in this quarter. And hopefully this quarter things are starting to look up, and we should show a growth in the AUM this quarter. The subsidiary companies have also some of them have not done well because of the economic scenario, but the overall business in the subsidiary has come down except for the microfinance. The others, we are having a cautious attitude to the growth in the home finance, the vehicle finance company. But the subsidiary which is doing the insurance broking business has done very well. So that is what we have. All the other things I think are there in the presentations which is there. I think we will open up now. We will open up for Q&A.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Ankush Agarwal from Surge Capital. Please go ahead.
Hi sir, thank you for taking my question. So firstly, in the last 7-8 years, our yields have remained constant at around 20%, 1 or 2% here and there, while our cost of funds have from 12% to 8%, which has allowed us to increase our spread from about 9% to 13-14 odd %. Right. So now, if the interest rate environment is such that the interest rate starts inching higher, so how do you see it affects Muthoot? Like, do we have room to charge higher yields to our customers and maintain our spread?
Okay. Thank you. I think we have been able to maintain our spread and our yield in spite of the spread has been maintained. in spite of we having to reduce some of our yields. But then going forward, I don't see a very great surge in the borrowing cost. Probably in the last 2 years, the borrowing cost has come down by about 200 basis points. In the next 6 months, I expect the borrowing cost to go up by probably 50 basis points only. But we will see that we will tweak our products and offer different types of products to customers to see that we are able to maintain our spread.
Right. But in a hypothetical environment where interest rates does jump and our cost of borrowing also increases quite a lot, so is there a room to increase our yields, right?
Yeah, if overall the interest rates are going up, then our borrowers also are not are in the same place only. So they will understand that everywhere rates are going up. We have always have room for that because our customers, especially the smaller customers, smaller loan ticket customers, are not that interest sensitive. And if everywhere the interest rates are going up, we can easily increase our interest rates also.
Right. Got it. And secondly, sir, on the growth of a gold loans business, right? Given the nature of the business wherein the repayment are quite fast, it is difficult to build a loan book. And now at a 55,000 crore loan book, probably we would be doing about 1.2 lakh crore kind of business every year. So I just wanted to know, what gives you the confidence that we will be able to grow this book from this level? Like, what are the key factors that will drive our growth? Like, would it be branch expansion or the overall uptick in economy? If you can highlight something.
Yeah, I think the overall uptick in the economy is what we should be looking at, because now we are seeing business also getting opened up. Our mainstay customers, the MSME customers, as well as the small shopkeepers, small businessmen, they are restarting business, and I'm sure this should increase the business only. Probably we will again restart or do little bit more advertisement also. We should be able to maintain a reasonable growth rate going forward also. I understand the base is going up, which was earlier much lower. It has gone up to 55,000 crores. So It's not easy, but then probably we should be able to do more per branch business and maintain the growth momentum.
Right. So, sir, is branch expansion has a direct impact on the growth? Like, if we increase the branches quite a lot, would that have a direct impact on the growth?
Not much though, because we are reasonably well placed with the branches even now. So I think you would have noticed that our per branch business has been steadily going up from 7-8 crores. Now it is almost touching 11 crores plus. So we can think of, or we definitely, any branch can handle much more business. We only need to increase the number of employees in the branch. With that, we can do much more business, and also the per ticket size also is going up, which was about 30,000 rupees 3 years back. It's now about 60,000 rupees. So we feel that this existing branches which are spread over all of the place can easily handle more business.
Right. And lastly, sir, like in terms of diversification into other lending products like microfinance, home finance, and all that, how aggressive you think you would be in the medium to long term, or you would continue to maintain 90 and 10 split between the golds and other businesses?
Yeah, the microfinance sector is now, I think, reasonably well placed, and things are getting in control. It is showing growth. Our microfinance company, in particular, we have received an approval for equity infusion also in that company. So that is a microfinance which we feel should be going well. The affordable home finance and the vehicle finance, we are going a little cautious, and also the personal loan business, we are going a little cautious because we will be calibrated growth only till we are sure of or more confident about the economic growth, because most of those are almost unsecured. Even vehicle loans are, you can say it is not that secure as a gold loan. And so those will take little more time for the economic activity also to pick up and economy to stabilize. Once that stabilizes, we will be able to grow. But as if you ask in the short term, we are not planning on aggressive growth in the non-gold loan business.
Yeah, my question was that is there some kind of internal target in terms of diversifying away from the gold loans? Or
No. We would definitely like to do more of gold loan business also, because earlier, 2 years back, we had thought of having 10%, 15% and 20% non-gold loan portfolio. But unfortunately, after the COVID, etc., things are not looking bright for as far as we are concerned, for the non-gold loan. So we are going slow on that. Probably after 3 or 4 quarters or 5 or 6 quarters, things should improve. And we are ready. We have every back end, everything is. We are ready for doing more business when the opportunity is there.
Right. That was very helpful, sir. Thank you.
Thank you. The next question is from the line of Deepak Gupta from Reliance Nippon Life. Please go ahead.
Hi, good afternoon. Thank you for taking my question. So firstly, if you could share some perspective on the rise in stage 3 loans, is it how much of that was on account of RBI circular?
The stage 3 circular, stage 3 loan assets increase is not because of RBI circular. It's because of a larger disbursements happened in Q2 of last year. Some of its customers, because of their cash flow challenges, they could not meet their repayment commitment. Large part of the defaults we have auctioned it off. Some are still kept because those customers asked for some more time. So that is the reason why there is an increase in the stage 3 asset. As you know, it is all collateralized by gold jewelry. We don't expect any losses. I think the stage 3 assets will get stabilized by end of the fourth quarter.
So, sir, what was the quantum of auction that you've done for the quarter, and how is it versus last year and last quarter?
So this quarter we have done 2,800 crores.
Last year was much lesser, negligible.
Okay. Sir, any specific reasons for doing auction, given the fact that you've always maintained the stance that you all avoid auction as much as possible because you lose the customer if you auction the gold? Why do you thought there was a need to do an auction this time around?
Yeah, because it is those customers who had taken loans in the Q2 of last year. See, many of these customers or some of these customers, they were not able to get the repayment which they expected. When a customer is pledging a gold loan, he has in his mind, he has a calculation that, yes, I am expecting some money from somewhere in the next 2 months, 3 months, 4 months and 6 months, pledging the gold and taking only 75% instead of selling it and taking all the 100. But some of these people, their calculation for getting back their money from the business or whatever has not been forthcoming. So probably they would have abandoned that, and the next option for us is to auction. So as Mr. Uman was saying earlier, we try to do a little more time to the customer and hold some of it in the book as stage 3 assets, in spite of it being a stage 3, because it is fully secure. We try to accommodate the customer as far as possible, and when it is not possible, then there is no other way other than to auction it.
Sure. So would you want to call out, is there any particular geography where this loan was auctioned, as in from where these loans originated?
All over the place. All over the place. Not particular geography, like north.
Okay. Sure. And how many customers it could be possibly?
The average ticket size should be about 60 or 70,000 rupees. So 2,000 means about 4 lakh customers.
Got it, sir. And sir, I've noted that the LTV has come down sharply this quarter. Is it only because of the rise in gold prices by 5% quarter on quarter, which is why LTVs had reduced meaningfully from Q2 to Q3?
LTV or AUM?
I'm talking about loan to value, sir. It's basically...
The loan to value is based on today's gold price, sir. So if the gold price is soft, the LTV will be lower.
The average LTV as on December, it is 16%.
Right, and last quarter it was at 73%, right?
Yeah, last quarter it was 73%.
Function of the price, sir. Function of the price.
Okay, so largely because of the price.
Yeah.
Right. And sir, just last question. You're guided for 12 to 15% kind of a loan growth for year end. You think you'll be able to meet that guidance for FY22?
We will try our best, but then things are not fully in our hands also. The business environment also needs to change a bit.
We lost first quarter also.
We lost the lockdown. We had a lot of releases or repayments in quarter 3. That is the quarter 3. Quarter 4 should do some plus, but probably we may not be sure of the rate there. But then definitely there will be growth in fourth quarter.
Sure, I hear you. Thank you so much, sir. All the best.
Thank you. The next question is from the line of Vivek Ramakrishnan from DSP Mutual Fund. Please go ahead.
Sir, good afternoon. This is a follow-up to the previous question. In some customers, you have given forbearance on repaying the loans, and in others, you have auctioned off the loan. So, when you give a gold loan, do you do any cash flow analysis on the customer's business profile or his personal finances? Because or is collateral the main value that you see, and the lending is against that? Then if there are delays, how do you take care of it?
No, see, the loan is to be given in quick time, maybe 5 minutes, 10 minutes, 15 minutes, and even if we ask the customer for his repayment or his place from where he's going to repay, etc., we will not get a forthcoming and a correct forthcoming answer. So, as you said, it is mainly security-based. Probably he has some calculation in his mind, but of course we don't do any checking of that or verification of his cash flow sources. So we don't do that. So when some customers come and request us in the branch manager is the person who recommends that okay, he feels that he is going to get some money in the next 2-3 months. So what maximum we give is 2-3 months only. That's it. If he's not coming in by the next 3 months, we just auction it in the next quarter. So what NPAs you saw 1.85% in Q2 has been fully released by Q3, and the 3.8 you see in Q3 is a new one. So we give them 2-3 months time more, trying to accommodate them as far as possible, because we are sure that we will not have a loss on that account.
Okay, thanks, sir. That was clear. Also, if you could explain the movement in the stage 2 loans, if Umein could provide some clarification on there's been a sharp fall.
The stage 2 which became stage.
So September Q2 stage 2 was 6,153. So that became stage 3 in Q3, which we either recovered or auctioned off, or some are remaining as stage 3 asset. Q3 stage 2 has fallen. The fall is because the increase first of all happened in September. Q2 because of 12 months back we had a sudden surge in disbursements post the first lockdown. So now it's from Q3 of last year. I think it's more or less a normalized disbursement. So that you can see it from our disbursement and collection chart in the presentation. I think it's on page 29.
Okay, sir. Thank you very much, and wish you luck.
Thank you. The next question is from the line of Gaurav Kochar from Mirae Asset. Please go ahead.
Yeah, hi, good afternoon. Thanks for taking my question. So just wanted to understand what would be the LTV of stage 2. If I capitalize the interest accrued on the stage 2 loans as well, what would be the LTV typically for majority of the loans?
Well, we don't have the exact numbers, but it should be somewhere around 90-95%, including the interest portion.
Okay, understood. That's helpful. And any sort of internal targets for March year end, and where do you want to bring the stage 2 and stage 3 assets down to, either with auctions or repayments? Any trend that you're looking at?
Nothing like that. We should have something 2-3%. That's it. Stage 3 and some.
2-3% of stage 2 assets.
Stage 3.
Stage 3 assets. Okay.
Stage 2 is in the making only, so it is for us to give more time to the customers. So if we give more time to the customers, they'll be happy, they'll be comfortable, and if we can accommodate people in the stage 2 in our books, so be it.
Right. Understood. Understood. And sir, from a provisioning standpoint, if I look at you are carrying 3 billion additional provision, COVID-related buffer that you had made. So do you expect to utilize this, in case of any sort of elevated credit cost in 4Q, or you believe that you can end the year with nominal credit cost without utilizing this buffer? Just wanted some thoughts on credit cost.
So it's up to the board to take that decision. So this is this excess portion is came during the transition process from GAAP accounts to the Ind AS. This is not any excess code provisions.
Okay. Okay. Sure. So will we be using? You're saying board will decide that. Okay.
Yeah.
Sure. And just lastly, the cost of funds has come down sharply in this quarter. What is our marginal cost of funds for this quarter?
See, I think we are raising somewhere between 7 to 7.5% on maybe 7.25 or 7.3% on the bank funding, depending on the tenor. And on the securities market, it is even on the NCDs it is even lower.
Okay. On a blended basis, is it fair to say it's around 7?
See, I think we should see the cost of funds coming down significantly maybe in the next 6 months.
Okay. Sure, because the fall in cost of fund is despite lower share of CP. So CP has come down quarter on quarter. Is it on a maybe quarter end basis? Is it down, or during the quarter also CP was lower versus last quarter?
Yeah, so because we are carrying excess liquidity, we thought reducing our finance cost a little bit. So we repaid some of the CPs for the interim. So we have only a small amount outstanding. And then when we recover funds, we'll start borrowing again through CPs.
Okay, sure. So just to get this, little more granularly, you had cost of funds to decline in the next 6 months. But what would trigger that? Are you raising money at lower value, lower cost versus?
Assuming a stable interest rate regime, I think we will retire our older borrowings taken at a higher cost. Now, suppose if the general rate of increase there is an increase to that extent, that decline will be offset. But in the current environment, I think we should see a reduction in our borrowing cost.
Okay. And any quantum, is it 15-20 basis points or higher?
Yeah, certainly. Yeah, maybe 15-20 basis points.
Okay. That's helpful. That's all from my side. Thank you so much and all the very best.
Thank you. The next question is from the line of Karthik Sahani from Myriad Asset Management. Please go ahead.
Hi, sir. First question is around your number of active customers. So, sequentially, there has been a decline of about 2%. I just want to understand your strategy and what's your target growth for this?
See, the decline is because, as we said, there were more releases this year than new advances. That is why the number of active customers have really come down. So that is one point. But then new customer additions have been steady, and we have done a 2.5 lakh. 3.5 lakh new customers have got added. But then, as we also saw, some customers due to auctions and releases, etc., aggressive repayments, they also went away from the book. But we have been able to add new customers. I think that is the strong point here. We've been able to add 350,000 customers this quarter also, new customers.
Okay, sir. Thank you. And my second question is around your NIM. So if we see the last 4 quarters, I think it's around 4.2 for Q3. So I just want to understand, given that it's an increasing rate environment, where do you see your steady state NIM?
See, I think we answered that earlier. So, assuming a stable interest rate scenario, I think we should see a decline in our borrowing costs in the 6 months. Now, if there is a rate increase which is going to happen, which happens, then to that extent that decline will be offset because of that increase. But we are expecting about maybe 15-20 basis points decline in the next 6 months. The borrowing cost.
Thank you. Got it. All the best, sir. Thank you.
Thank you. The next question is from the line of Ashwin Kumar Balasubramanian from HSBC AMC. Please go ahead.
Yeah, hi. Just wanted to understand the higher auctions which you mentioned. Is it because in the last year, September, December quarter, you would have disbursed some of these loans at a higher gold price, and those would have sort of now become NP, or the customers would not have rolled over earlier, and that also explains why the LTV has come down, because those higher LTV loans have gone off the books.
See, we disbursed about 50,000 crores during that quarter. Out of that, only 2,800 crores got auctioned off, which is a very minuscule number compared to the disbursements. So, which also explains the reason why some of these accounts have to be auctioned, because customer might be facing some challenge in terms of the cash flows. We gave them time, further time, but unfortunately he is not able to generate. We can't wait any longer. In spite of that, we have kept some of these loan assets as stage 3 asset, which we will liquidate in this current quarter. So,
right. But I'm just trying to understand. Is it also linked to the gold price, because that was the quarter when we saw a sharp fall from then on, and since on a year-on-year basis the gold price is lower.
So in Q2 there was actually a lot of demand for funds. People are opening up their business, etc., and they wanted funds, and we were there to give them funds for quite easily. And the gold price, the higher gold price at that time also helped, definitely helped. So they borrowed. If they wanted to liquidate it, they should have sold it and got the 100%. But they had expected some cash flow in the coming 3 to 6 months, but which didn't materialize for them. The final option was to auction it.
Right. So in that sense, these auctions will continue going forward also.
It is part of any gold loan business. If the economy is not doing well, and these people are not getting the cash flow which they are expecting, which they are mentally expecting, unlike a salaried person who is getting a regular cash flow, 99% of these people are not salaried people. They are all small business and traders, and a lot of things are uncertain, and probably when they don't get the cash flow they expect, finally they abandon the gold, and that is what we auction. We try to give them as much time and accommodate them in our books as maybe stage 2 and stage 3, etc. We try to accommodate as far as possible, and then when it is not possible, then we just auction it off.
Right. But is the decision to auction also related to the gold price? I mean, I'm trying to understand, or that is irrespective?
No, auction is not related to gold price, etc. But if suppose the gold price goes up very high, then customers those who thought of abandoning the gold may think of, why should I abandon the gold? I will try to release it and somehow lend it or take it back. That's the only thing. Other than that, it is not related.
Okay, thank you.
Thank you. The next question is from the line of Piran Engineer from CLSA. Please go ahead.
Yeah, hi sir. Just one accounting question. So do we reverse the accrued interest after 90 days past due, or immediately on 1 day past due?
No, after 90 days past due.
So then we'll reverse the full 15 months accrued interest, is it? From an accounting perspective? Or just 3 months?
For 15 months.
Full 50. Okay, got it. And so secondly, just regarding balance sheet liquidity now, we for a while we've been maintaining very high levels of balance sheet liquidity. 20% of our balance sheet is kept in liquid assets. So, and this was not the case earlier, about 2 years back. So, do we see a case of trimming liquidity from the balance sheet?
I think we have done this exercise this quarter. I think you would have seen that our absolute finance cost has come down a little bit. That is partly because of some kind of a treasury management which we have done. Liquidity, as we have always mentioned, we have to keep it at a higher level because of the LCR requirements as well as the challenging times which is there, and also because being an NBFC, we need to have higher liquidity, and it also helps in giving more comfort to the rating agencies. So that we should see it as a part of our business model.
Got it. So the high level is here to stay, simply put.
Not the very high level, a reasonable good liquidity we should expect now. We should be keeping now. If you take it 2 years back, we had all the IL&FS issue, so many NBFC issues, and everything. Every time liquidity for an NBFC, where we don't get any funding or support from the Reserve Bank, we need to have our own liquidity. So keeping liquidity, even at the cost of some interest loss, it's not a bad idea. It's what the board has been always thinking. So we will keep good liquidity, but not necessarily the very high liquidity.
Got it. Okay, so that's all from my end. Thank you and all the best.
Thank you. The next question is from the line of Abhijit Tibrewal from Motilal Oswal. Please go ahead.
Yes, thanks for taking my question. Sir, just wanted to understand, gold prices have recovered in the months of November and December and remained broadly flat in January. So, I mean, if I am doing my math right, I understand that there were forward flows of about 1,000 crores in the third quarter in your stage 2 and stage 3. So basically, even if I net off these, auctions that you did about 2,800 crores, there were forward flows of about 1,000 crores in stage 2 and stage 3. What are the forward flows that you are expecting now, and to that extent, what is the quantum of auctions that it could lead to? That's my first question. It's a related question. I think you and even the other gold financials always talk about that extra LTV, which is the making charges, which kind of acts as a margin of safety for you. But does that really play out in the real world, given that, I was seeing, if I look at the monthly average gold price of August, when gold prices were at its peak, August 2020, to maybe the monthly average gold price in January 2022, it's broadly around 92% of what the peak gold prices would have been. I'm talking about the monthly averages. So, and despite that, customers still want to abandon their gold. How should we look at this?
So, first of all, can you just tell me what you meant by forward flow? I didn't understand this. Forward flow.
So, what I meant is, if I look at your stage 2 plus stage 3, which is your 30 plus DPD, as on 2Q and as on, and kind of take that difference of the 30 plus DPD and then net off this 2,800 crores of auctions that you did, there's still another 1,000 crores which would have probably flown from stage 1 into stage 2 or stage 3.
Okay,
so
I'm asking, sir, looking at the gold prices today, what is the quantum of forward flows that you expect in fourth quarter, and what is the quantum of auctions that it could lead to?
So, we have given the breakup of stage 2 assets and stage 3 assets. Stage 2 asset logically should move to stage 3 assets if it is not liquidated. Stage 3 assets, it's already there as a stage 3, or it has to be either liquidated or it will remain in stage 3. We can't quantify in terms of the auctions, because a lot of these customers come and close the loan by paying the amount. As I said earlier, in Q2 of last year, we disbursed 50,000 crores. Out of that, we had to auction only around 2,800 crores and probably another 2,000 crores. So, which means that out of 50,000 crores, only 4,800 crores went as overdue. So, it's a minuscule amount. So, the reason why we have to auction it, you are also mentioning about the making charges. See why we had lent with this 50,000 at the peak of the gold price. We need to draw comfort from the fact that 45,000 crores got repaid. So that could be either because there is adequate customer is interested in the jewelry. That could be because of also his sentimental attachment. That could also be because of his higher equity in the ornament through making charges, etc. All these factors play a role. Now the reason why it goes for an auction is customer doesn't have the cash flow. What he can do, even if he gives diamond, if he doesn't have the money, what he can do? It will finally go for an auction. So that is the reason why the auctions are happening, because we can't wait any longer for him to generate cash flows and repay this No, ideally, we would like these customers to come and take back the ornament, but we can't wait beyond that period.
The advances were 80,000 crores.
Got it, sir. So this is useful. I had just one more question. So given, I mean, I understand that you've always kind of said that, I mean, the competition doesn't really affect you a lot and kind of visible in the yields and the spreads that you report. But sir, I mean, I just wanted to get some comfort that looking at the competitive landscape today and at whatever rates the peers and the competitors are lending, do you have, I mean, that comfort that you will be able to maintain your spreads going forward? And sir, the last question that I also had is, you talked about interest income reversals when a loan becomes an NPA, and to that extent, when a loan becomes an NPA, you have also kind of like this quarter increased your ECL provisions. So now, I mean, let's say next quarter when you do those auctions and the NPAs come off, would you see a reversal of the interest income that you took during the third quarter?
There will not be a reversal, but the interest income will be higher, and the new loans on which interest is accrued will be higher. There is no need of a reversal. New things will come. Your earlier question was what was your earlier question?
So the competitive landscape and your comfort on the spread.
Competition is always there. We have to survive in competition also. So we have to devise new products. So we will be giving new products. We will come up with something to see that we are able to maintain our yield reasonably well. Our net interest margins or the spread reasonably well. We will try our best to do it. That's it. We will with our what should I say? Our leader advantage, leader in the gold loan business advantage. Sure, many customers should be coming to us. Some go away because of the lower rates offered by some people, but a good part of them should come back to us, and we should be able to reasonably maintain our interest spread.
Great, sir. Thank you so much, and wish you and your team the very best, sir. Thank you so much.
Thank you. The next question is from the line of Digant Haria from GreenEdge Wealth. Please go ahead.
So my questions are, mostly at the industry level. So for any gold loan business which happens at the branches, sir, how important are the employees for, relationship management with the clients? And if I have to just, rate the need of an employee for maintaining relationship with the client, or doing the operations, which is evaluating the gold and doing the other things which a loan disbursal process would need, where would you rate this relationship? Like, how important is it in the gold loan business generally and for us also?
Okay, that's a very, very nice deduction and things which you have done. I think relationship is important. Probably some competitors feel that relationship is so important that they try to take away our staff, thinking that the relationship will bring all the business. It is not only the relationship, it is also the goodwill and other things of Muthoot which also brings customers. Relationship to some extent helps, but it is not the all in all about it. Just because X moves away from Muthoot to somewhere, it's not that all the customers will move with him. Probably that could be there for some wealth management company, somebody who is managing the wealth of somebody. If he moves from one company to X company to Y company, they tend to move. But I don't think gold loan people are like that, because most of the people come to Muthoot because of Muthoot's name and Muthoot standards, etc. But a very, very small percentage of things is there with the relationship. Then your processes, etc. The process and turnaround time is also very important. And because of Muthoot, we have been in this field for quite some time. We have been able to iron out so many other things so that we can do a good turnaround time, a quick turnaround time. Those are all factors which help. So to answer your question, the branch manager or the relationship executive in the branch, not the whole deciding factor for customers to come or not come to.
Right. So you have already answered my second question, which I was going to ask, that if the customer if the employee attrition is high, because sir, I generally hear that even a Kotak Bank or an Axis Bank, everybody wants to build a gold loan team. And, because we have such trained employees and, long-standing employees, are they asking you for raises, or, is employee cost going to meaningfully rise because of the market scenario, or you think we can, really manage this whole intense phase?
We wouldn't like to lose good employees. Definitely, we wouldn't like to. And people just don't go away merely because of some salary, etc. But then we have good incentive scheme, so that they are also happy. Incentives, rewards, recognitions, etc., which keep them attached to us. But in spite of that, but actually what we have seen is in the recent past, it's not that people are going away from us. We have seen that some people are actually not interested in working. They are thinking that I'll go home and take rest. I'll go to my village, especially in cities, etc. We have seen that people have gone home for COVID, don't want to come back to the city. It's on the lighter side, I'm saying. So there are a lot of people who have just not come back. Anyway, competition, to some extent, there is some churn happens, and some churn also needs to happen always. You can't have somebody sitting there all the while.
Right. Sir, no, thank you for these answers. Sir, if one more question, if I can ask, that, one startup is claiming that, they are taking photograph of the gold ornaments, and they're doing some machine learning and artificial intelligence to detect if the gold is pure or not. So, certainly, I think, a lot of people can claim whatever they want, but, you as the largest player, as a leader, as the innovator, are you seeing any such spots in the market which, somebody has cracked well, and, which probably we need to learn and adapt, or we are, we are good with the developments which are there? Is there any thoughts on this?
We are not at all good with the developments. We are there. We are also thinking. We also have some R&D departments, etc., which constantly evaluate such things. And our Chief General Manager Vijumo, who's recently been promoted as Executive Director, he says one day we will see that he wants somebody to put some gold in the vending machine, and the cash should come out from the other side.
Right. Sir, good to hear that. All the best, and yeah.
The loan should come out from the other side. So we are also every day thinking of it. But some people sometimes come with some things. But what we have been not able to crack is how to test the gold ornaments without defacing it, or without actually cutting it, etc. That is the challenge we have. Probably after some time something may happen, and if there's something will happen, we will be the first to do it.
Right, sir. So great. Congratulations, and thank you so much for answering the question.
Thank you. The next question is from the line of Nitesh Jain from Investec. Please go ahead.
Thanks for the opportunity. Firstly, when we auction these
Jain, sorry to interrupt. Your voice is not clear. So if you can speak closer to the handset, please.
Hello? Is it better now?
Yeah.
Yes, sir.
Yeah. So when we auctioned these loans in this quarter, is there any loss that we have booked on principal or interest, or we have been able to recover entire good interest as well?
No, we don't have any principal loss. Probably some small interest reduction may be there. That's all. Nothing substantial. There will certainly be some interest loss, but nothing substantial.
Sure. Secondly, I've been noticing that a lot of companies are marketing gold loan at 60 basis point per month interest rates, 70 basis point per month interest rates. And I think in between we are also marketing that. So how we differentiate between customers to whom we will be able to give low interest rates, who will be able to charge high interest rates?
I think it is the branch manager or the people there who decide. Probably we have some schemes also where big loans are there. Big loans are there. Regular customer is there who has been with us for a long time. We also have some other loans. That is where we give interest concession. That is the new interest scheme. We have some specific schemes for that, and if they fall in that scheme, we give it.
Okay, and what is the lowest interest rate that they are offering to the customers?
Today it is 6.9%.
So
Per annum.
Higher side. And then lastly, the number of new customer acquisition has been flattish or declining across many quarters. So are there taking any steps to increase the new customer? So we are able to cross-sell to the existing customer, we are able to activate our new customers, but the new customer acquisition number has been flattish or declining quarter-on-quarter basis.
This quarter also, our new customers acquisition has actually gone up. It is 3.5 lakhs this quarter. That's the new customers. But unfortunately, many customers in the old loans, etc., they had to be auctioned, and many customers also.
We request all the participants to please stay connected while we reconnect the management. Ladies and gentlemen, we have the line for the management reconnected. Over to you, sir.
Please continue. Your line broke in between.
Yeah. I was asking about new customer acquisition. That number has actually declined Q1, Q, and I think YOY also, on a YOY basis also this quarter, the number is lower than last quarter.
See, overall the outstanding customers would have declined, but then new customer addition had been very high in this quarter. 3.5 lakhs is the new customer addition. But unfortunately, many customers closed their account also. The larger number of customers closed their accounts, and we had to do auctions also. Because of that, the net increase in customers were not there. That is what. But then what we see is what the redeeming factor is that new customer acquisitions are high.
Also, sir. So lastly, the entire customer acquisition is through branches, right? Are we able to acquire any customer through online channel or any other channel apart from branches?
We have different channels. So online we have lead generation, not online channels. We have lead generations coming through other channels also. Our repeat customers are there. Our customers who have earlier been there and not coming now, we win back customers. All those things are there. But then the customer has to come to the branch.
Understood. Thank you, sir. That's it from my side.
Thank you. The next question is from the line of Manan Tijoriwala from ICICI Prudential AMC. Please go ahead.
Hi, sir. Sir, wanted to understand what would be the quantum of assets that would be about 3 lakh ticket size in our portfolio right now?
About 20%.
20%.
Okay. So basically, just to understand a bit more from the angle that what would be the competitive intensity from the banking circles and other NBFCs, if you could put some color on that.
Yeah, it is just because it is a higher load, it doesn't mean that the competitive intensity is high. So we also have lower interest schemes for higher customers, etc. We have different schemes. So competition intensity will be there, but then it is probably our job to see that we retain our customers.
Right, fair enough. And sir, what would be the quantum of assets priced below say 10% rate of interest? So basically the teaser schemes that we had launched everyone has launched in the last quarter.
Okay, I think that is again moving. It's a moving number. What is there this month may not be there next month. So we haven't done some maths on that.
Okay, but if you could provide a range or something?
No, Manan, that information is not available.
Sure, no issues. And sir, what would be the LTV on the stage 3 assets that we hold?
LTV at the time of it will be at the time when we give the loan. Stage 3 can be maybe 3,000. 3,000.
Just 100 rupees above as of today.
100 rupees above today's rate. That's it, correct. That is the maximum.
It will be over 100 on stage 3 assets.
More than what is it today?
What Industry was saying is that that time 12 months back we had given probably at around 3,500 rupees. So 12 months interest got added to it. So it will be somewhere close to 90-95%.
Okay, so it's still up below 100% basically on stage 3 assets also.
See, no, just because these assets are stage 3 doesn't mean that customer has not paid interest. There are so many loan accounts where customer has paid up-to-date interest. But because these loans have crossed 15 months, it is classified as an NPA. So those cases also will be there.
Correct. Fair enough. That's all from my side. Thank you.
Thank you. The next question is from the line of Sunesh Khanna from IIFL AMC. Please go ahead.
Yeah, hi sir. So sir, given that we have had a flattish quarter this quarter, so are we maintaining a 15% growth target for the year, which I think looks difficult? So in that way, any other target you or color you would like to give, will we maintain? We will end the year somewhere around 9% that we have delivered, or it could be slightly higher?
We should be slightly higher than 9%, but anyway, you yourself see that we may not be able to do the 15%. Yeah, it will be a little higher than 9%. Yeah, I don't want to do any number now. Definitely higher.
Okay, and for next year onward, we maintain our guidance of 15%?
Yeah, I think we should be able to do that 15% next year. Yeah.
Got it. That's it from me. Thank you.
Thank you. The next question is from the line of Bunty Chawla from IDBI Capital. Please go ahead.
Yeah, thank you, sir. Thank you for giving me the opportunity. My questions have almost been answered. The one question on the subsidiary part, if I see the Muthoot Money, which is an NBFC, it has reported a huge loss of 9 crores. And if I see there has been an increase in the branches, there has been an increase in the employees, stage 3 assets has gone down, but there has been a reporting of the profitability loss of 9 crores. So any change in that strategy in that NBFC, if you can share that?
I think what is happening is all the loans which are good, especially the commercial vehicles, used commercial vehicles, etc., have become stage 3. And as a prudent measure, we have just written off many of these things, but we expect these to more recovery to come even from the return of accounts. But we just wanted to show a better position with regard to the assets which we have on books. That's why aggressive write-off we did. That is simple as that. Aggressive write-off when we felt that it is beyond the stage 3. That's it. That is why we have taken a loss in the book.
Oh, okay, sir. Thank you. Thank you very much, and best of luck, sir.
Thank you. The next question is from the line of Shweta Daptardar from Elara Capital. Please go ahead.
Thank you, sir, for the opportunity. So a couple of questions. So one being, if I look at your options realization, if I go back and look at the history, so FY21 has been slightly lower than past 2 to 3 years. So is it that the pandemic has been also impacting on the realization front? And how would the picture pan out going ahead? Because now that we have slightly higher numbers.
Can you repeat the question?
The auction realizations, if I look at your FY21 annual report, that number has been lower than your last 2 to 3 years run rate. And now that we have slightly higher number on the auction front, how will the realizations pan out going forward?
How do the?
Realization, recoveries, realizations through auction. How will they pan out going forward?
See, realization on auctions depends upon the price at that point of time. On to the first question, past years, the auctions were lower because the collections were better. Now, earlier in the call, we had explained the reasons why the auction numbers have went up because, of the larger disbursements we have done in Q2 and Q3 of last year. So, and as I said, out of 50,000 crores of disbursement in Q2, the auctions done is only around 2,800 crores, which is a very small number. We could have given some more time, but market expects certain level of certain limits in terms of the stage 3 assets. So we didn't have a choice but to auction these accounts.
Okay. So secondly, in terms of your gold loan growth, so you were mentioning last quarter that we have also moved out of home turf looking at newer geographies like North. So how is it like doing business in North on the gold loan side different from what you're doing currently in the existing geography? And will that be a newer trigger to your gold loan action ahead?
I don't know what, there is nothing like a new strategy for North, etc. North, the only difference in North and South is North, East and West, our branches are in the bigger cities, and in South we are there in smaller towns also. That's the only difference. Otherwise, the same strategy, same growth is what we see in North and South.
Okay. So my last question in terms of provisioning run rate on P&L. So this quarter, last quarter, the provisions have been around in the range of 700, 800 odd million. So how do you see this number, a ballpark guidance going forward? You also mentioned that your GNPs or stage 3 should come down to 2 to 3%. So how will it reflect on the provision on your P&L?
There is actually, technically, practically, if you ask me, there is no need of any provision for a gold loan company, because the loan is fully secured. We have the full security with us. But technically we have to provide provisions. So provisions maybe, whatever you see, provisions are actually reserves, because we have never had a need to dip into the provisions till now. So we need it actually. But then provisions goes up because standard provisioning also goes up, because when the asset goes up, standard provisioning goes up. For the NPA, whatever the provisions we had earlier also, we have never tried to reverse it. But we had excess provisions earlier, we just let it there. So I think we have around 900 to 1,000 crores of provisions in the balance sheet, which if you ask me, it is actually a profit of the company or reserve of the company only, because none of these loans which you see as NPA will result in a loan loss, and we have to write off the provisions or dip into the provisions. And probably next year also, if the stage 3 is higher, we need to do provision more. If the stage 3 is lower, the provision may be lesser.
Okay, sir. I got the fair idea. Thank you.
Thank you. Ladies and gentlemen, due to time constraint, we take that as the last question. I now hand the conference over to the management for their closing comments.
From my side, Managing Director here, our CFO, Mr. Oman, our new ED, Mr. K.R. Bijiman, and the other new directors who also joined the call. On all their behalf, I thank ICICI and the team who have arranged this, and also definitely thank all the participants for their participation, and also thank them for their support. And we hope and we are sure we will continue to support the company. From our side, we will do our best to run the company well, and for those investors and other stakeholders, we will try our best to give you good returns or good expectations, or we will try to realize your expectations about the company from our side. Thank you and good day.
Thank you. Ladies and gentlemen, on behalf of ICICI Securities, that concludes this conference. We thank you all for joining us, and you may now disconnect your lines.